This conference will now be recorded.
Good morning, everybody. This is Greg Morton. It is Sunday, June 11th, 2023, and this is the weekend Canslim Growth Stock video update from the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, for educational purposes only, not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we want to learn first and only then invest. So today, let's look at the weekly and year-to-date review, sort of a quick macro. We'll look at the impact during current market review, just drilling down a little bit deeper there. Action plan thoughts currently. Some comments on what I'll call Wicked Wednesday, which was this past Wednesday, which wasn't that wicked, but growth stocks got hit. So just a couple comments on that and maybe some things we can learn from it. And then we'll look at some charts from this weekend and just a couple from my weekend routine. So current impactor. Per O'Neill and IBD, we always want to diagnose, we want to interpret, we never want to predict, we never want to argue with the market. So we look at three things: the action of leading stocks. I'm talking about strong Canslim stocks, fundamentally and technically. And even if you missed them, you still get clues and information on the M from watching them. Actions of stocks owned, percent invested is growing. Sorry, got a typo in there. That was supposed to be deleted. And then, so it is growing. Market pulse, distribution day count, price and volume on the indexes, as well as we'll look at the coloring book. So let's look at the macro first. So my Ride the Wave plan weekly review. So last week, the NASDAQ was up 0.14% on increased volume. S&P 500 was up 0.39% on increased volume. NYSE was up 1.01% on increased volume. Dow 0.34%, and then the small cap sort of rocked. Russell 2000 was up 1.9%, SP6 was up 1.67%. Those have been lagging, so they're playing a little catch up there. Year to date, NASDAQ's up 26.7%, S&P 500 12%, Dow 2.2%. So you see some divergence there. Just the coloring book snapshot that we'll look at. I just noted we've got 5 days of net new highs, which really means it's been 7 days since the trend doesn't show up till the third day, the way Matt Caruso counts them, and that's what I follow. All the MMTS across all 6 indexes are now green as of Wednesday, as that's when the NYSE flipped to green. Window of opportunity has been open for 62 days. Market school exposure is at level 6, 7 is the max, and 5 is 100% anyway, and the power trend zone. Distribution count is 3, 6, and 5. Actually, it's 3, 5, and 5 because one dropped off the S&P 500. And then my buy-sell day count is 10/7. So that's constructive. So just a couple notes looking at what happened this week and tracking it. So Monday, indexes reversed down. Tuesday was a nice accumulation day with 2 breakouts, one of them being a thin stock and an early entry potentially on FROG. Wednesday was the bad day. Growth was hit, had distribution ×2, but that was the day the NYSE flipped to green on the MMTS. Thursday was sort of a nothing burger day, just treading water. Friday was up but low closes. Potential pause ahead of the CPI, which comes out on Tuesday, and then the Fed meeting starts Tuesday with results on Wednesday. So maybe capital's just sort of waiting and seeing. Overall, growth stocks did well. I thought leadership and strength broadened. 5-day trend of net new highs is significant. Still some rotation, going to small caps, coming back out. So there's still some, underlying concern there. Next week, Fed meeting looms, as already noted, and then IBD for the weekend noted, similar to what I was saying, small caps, mid caps lead the rally. Equal weight also made a strong move higher. Rally's broadening, leadership's broadening, I agree. It was sort of these big cap tech, so it's spreading out. Obviously, there's a lot of attention on AI, and then they gave the summary for the week like I did. So let's look at the index charts and the coloring book. So we'll hop out of here to the indexes first. So we'll start with daily. So here's the NASDAQ. So this is nice. All 4 moving average lines are stacked in the correct order. Just kind of had a pause week. nothing wrong with this at all. And we're heading into the, low volume days of summer, so we may see volume go down some. S&P 500, same thing, looking good. All four moving averages stacked in the correct order. NYSE, still trying to get in the right order. So this has been one of the weaker ones, and the RS line looks terrible there. So that's not really where we want to be fishing. Dow, poor RS line also, but did have, constructive week with those days up. Here's the small caps, trying to jump back up, trying to get their moving average lines in the correct order. Same thing on the S&P 600. So let's go back and take our weekly perspective. So the NASDAQ, 7 weeks up in a row. Little bit of wedging up, but again, volume decreases as we get into the summer. But constructive RS lines, trending up. That's looking better. S&P 500, 4 weeks up in a row with, volume picking up a little bit. NYSE, again, one of the weaker from the RS line, but even then, making a little progress. Dow, same thing, stopped at the 40-week line. Russell working on improving, 2 nice weeks up in a row. And S&P 600, also improving back above the 40-week line. So those are good. If we look at the coloring book, and I haven't updated it for Friday, somehow I couldn't access it from home this weekend, so it's on my office computer. So Friday hasn't been filled in yet, but Friday we would have dropped off a red day, so it'd be 10/7 buying versus selling days. We dropped a distribution day on the S&P 500, so it's going to be 3, 5, and 5 distribution days. Everything's green. Power trends own market school exposures, at least M6. We have 5 days of net new highs, and we didn't have any breakouts or anything on Friday, so I'll fill that in and post it Monday morning on Twitter like I usually do. But this is, looking constructive. Lots of spring green showing up. So that's something we pay attention to and act upon. And if we look at the group teaching portfolio, so we have really 5 long positions. None of them are up to full initial position size. I added this to page 1 so you can see what size they are based on a full initial position, which would be $80,000 would be a full initial position. But everything's green. The strongest, obviously the one that's up the most is the strongest, is double verified DVs up 12.4% from the entries. And then the other ones are, trying to get traction. And we have some short positions, which I talk about more in the monthly meetings. Up almost 1% for the year, so definitely lagging the indexes. And now 61% invested. So the market's been pulling us in a little bit, which is what it is supposed to do. And we still have the shorts, couple short positions via puts. So we talked about that. I think the market environment continued to improve this week. I think leadership broadened, which we were really looking for. We have some new Canslim names that are setting up and acting well, not just the old big cap tech ones that we all know. And remember, Canslim's designed to pull us gently into strong markets and strengthening markets and to push us out of bad markets. And I think it's doing a good job of doing that right now. So my current diagnosis, I'm a lot more comfortable playing more offense now, as long as very disciplined with stock selection, stick with the best of the best, fundamentally and technically. We've got the M working in our favor. Again, it may just be a short-term uptrend, or it may be something longer. I have no way of knowing. And I want valid entry points and sizes. I don't want to chase, and I don't want to plunge. And that's part of the reason that none of those position sizes have been pushed to full size yet. And it may be because they got extended, and I'm not going to chase the ones that are extended. So current market picture for me, really the same as last weekend. I think the go or the buy button's on, but still want to be careful. Not stomping on the accelerator at the drag strip yet. And remember, always, always, always do your weekend work and routine That'll really help you stay in touch with the M. Helps a lot on the action of Canslim Growth Stocks. That's where I started seeing these new names. And use the Market Smith Growth 50 if you have Market Smith, and certainly use all the list in the paper. And you'll capture, just if you have the paper and IBD digital, you're going to catch most of what I'm catching in the Growth 250 anyway. So long-term outlook further down the road, I'm still very optimistic. I think that party like it's 1999 is going to come because we've had a long bear market, but it may be now, or we may have another sort of correction pullback before we get to that. But the expectation after a bad bear market, which we have had, is for a strong bull market down the road. Just no way to know which follow-through day is going to be the one that absolutely works. And the historical pattern is after a bear market that the first leg up, which is where we would be now, if it turns out we're in a bull market, again, not predicting, but it's a little harder to get traction during that one. And then the big money's made sort of in that second move up. So chart review, let's go back to Market Smith. See what I dumped in here this weekend for us to look at. So first two are some ones that got hit, just to remember how bad things can get. So this one's losing money, not something I would have owned anyway, but it's a well-known name, and Novacure was off 46% for the week. And then Smartsheet was one we were watching for the earnings reaction, and it was bad. So off 26% for the week. If we look at the daily bars, you can see the earnings day, and then it continued, had additional deterioration on Friday after earnings came out before the market opened on Thursday. They may have come out the night before, but they were either after close Wednesday or Thursday. So those got hit. I put Tesla in here. I'm not in that one, but it broke out on this base, showing some strength as well as some of the other automakers. So that's just a leader to kind of keep an eye on. Obviously, liquid, it trades $32 billion per day. So that's a ton. And MDB, so this is one of those new names. It's extended, but I mean, it has Canslim numbers. It has the fund ownership. It does have higher debt than I like at 154%. It's liquid, 700 million per day dollars, and 26 billion market cap. So that's just, again, we want to see new names emerging. So there's one, even if it's not actionable. Hubs is another one. Most people aren't going to know this name. Those of you who read the newspaper do know the name. But again, this is what we're looking for. Breaks out, hits the 20% profit goal, has the ownership over here. Fidelity Contra Fund is just starting to get into it. 1, 2, 3, 4, 5, 6, we have 8. You got T. Rowe Price, New Horizons in there. So that's one we track. So, there's 3 or 4 we really focus on. So seeing some progress there. And then a couple that are setting up. So here's Shockwave. Has this cup with handle. I drew a sloping trend line in there. To me, this looks like a flat base. It looks like it's 5 weeks long, but pattern rec's not picking it up. So it'll pick it up next weekend. If we go to the daily chart, maybe this is why, maybe because it popped up here is the issue. But I'll put my thumb over those 2 days that popped up, and I look at this as about an 11% flat base forming. Or if you start counting here, which is what pattern rec will do, we're 20 days into a new flat base. So that's the one that may show up by the end of next week. After the close next Friday, we may have a new pattern there. So this one has institutional ownership, super Canslim numbers. Go to the weekly chart, it's easier to see. I mean, look at this triple digit growth. I know it declined a little bit, but these are real money, $1.13, and great sales growth too. Very new product, very revolutionary in treating heart disease. And look at the ownership. Fidelity Contra Fund just barely started position. You got Lord Abbott and T. Rowe Price. Those are the 3 right there that I like to track. You do have actually Lord Abbott selling it, so that's worth noting. or decrease in their size. We'll see if they build that back up. So this is a really deep basis, 46% deep. I don't like that. Anything over 41%, I think IBD's research shows has a significant chance of failure, but I do like to see a base on base form, and I think that is what is happening now. And you could have early entries. There's a horizontal trend line, or on the weekly chart, also drew a sloping trend line, which you see it broke through, and you even could redraw it and go across the recent high of last week to study that one. But good numbers. Return on equity, look at that, 32% plus pre-tax margins at 25. Those add up to over 50 together. That's very strong. Minimal debt, $174 million per day. It's liquid in 10 billion market cap. And that's the Jim Ropel sweet spot. He says if you can find a stock that can go to and hold it from 10 billion to 40 billion market cap, you go from coach to first class, and maybe even first class to private plane. But that's what we're looking for. Not saying it'll do it. Here's another one, not a new name to people that are reading the newspaper or watching IBD live. So you've got it set up in a cup with handle here. It's only 16% deep. I'm sorry, cup without handle. It broke out. It's pulled back to the pivot, and 40 to 50% of strong Canslim stocks do that. Oh, it probably has a little bit different pivot on daily and weekly. Let's see, 683.18. Yeah, 698.59. So it's actionable based on the weekly chart. You've got some funds in there. Again, phenomenal return on equity and pre-tax margin. And if you were reading the paper this weekend, you would have seen this one is in the sector leaders. If I remember correctly, I highlighted the strong numbers. So that's what I was just showing you in the fund ownership. And then it's on the sector leader list, which is the top list in the paper, best of the best, hardest list to get on. And look at this, number one in semiconductors. It is in a buy zone. It's actionable right now. And why is it relevant? Because NVIDIA relies on Taiwan Semiconductors for its chip, which in turn relies on ASML in making the chips. Their equipment second to none. They have such a strong advantage that they almost have a monopoly in this sector. Look at this EPS, 34% to $20.30 per share. Big, real numbers. And in fact, their stuff is so good that we have restrictions on some of their best products not being able to ship to China. And of course, a top composite rating. So again, great knowledge in the paper, new name, Canslim Growth Stock setting up. That's what we want to see. And this is not the only one. There's more of them out there. So Wicked Wednesday, again, it wasn't that bad, but it sure felt bad at the end of Wednesday. Everything I own got hit hard. And so what do we learn from this? Let's go back to, oops, not that. That never let me out. Go back to Market Smith. Okay, so where did I want to go? Oh, holdings. Oh, I lost it. Group teaching portfolio. There we go. All right, so let's look at these and what happened on Wicked Wednesday. So that's an ugly outside reversal bar. But what did it do? It touched the 10-day line. Didn't break it, didn't close under it, didn't even get close to the 21 and the 50-day. So again, in a vacuum, it looked like a bad day. DT, same thing on Wednesday. It got hit, came down to the 10-day. Dexcom, bad Wednesday, came down to the 50, 10, and 21 day and stopped. Palo Alto got hit, bad day, touched the 10-day line again. Shockwave, which we were just talking about, bad Wednesday, came down, touched the 10 and the 21 day. And I'm not going to talk about the shorts. So when we look, and let's look at the weekly bars on these. So nothing wrong with that chart. You know, one day felt bad, the week looks great. DT, lower range close, you know, hit some resistance, still above the 5% buy zone. Dexcom, Same thing, great weekly bar, closed above last week's. Volume was a little bit down, but we had a strong volume week last week. Palo Alto, low range close, still in the buy zone, nothing terrible, not breaking. Shockwave setting up this flat base that I talked about. So looks good. There's a sloping trend line in it. And again, you could even draw a new one. I will draw a new one a little bit higher. So what do we learn from that? Bad Wednesday when our emotions are sort of tugging at us. Don't get caught up in the day-to-day action. Don't follow every tick up and tick down on the charts. In fact, unless you're a day trader or swing trader, there's really just not much to do during the day, unless you have something you're trying to enter and you're looking for a good entry during that day. Always, always, always focus on the weekly chart. That's where O'Neill did most of his work, and that just gives us a better picture and smooths out that emotional distress from watching one day. Don't ever trade on emotions, rather trade based on your written rules. And on that Wicked Wednesday, no sell rules even came close to triggering on any of those group teaching portfolio holdings. In fact, you saw a lot of them. It just touched the 10-day. I mean, just really, really nice action. So just a quick note on our monthly online meetings. Probably not going to do a June meeting. I'll pick back up in July. Here's what we covered in May. That was a big meeting. I went through my IPO sort of best of the best list called out of the last 7 years. And then I developed a new template for you based on what Ropel and Eve have done, the Ride the Wave plan, and I showed you just a snippet of that earlier here. So again, prior meetings can be ordered. If you don't have written sell rules, these three are really key. The prior meetings are $15. If you don't have a weekend routine, the September and October ones are strong, and then the Ride the Wave plan from last month, I think was a nice meeting also. So if you're interested in ordering those, you can reach out to me at this email address, and I'll send you the whole list and how to order them with instructions for that. And then I get them to you I send you emails to the links. You can follow me on Twitter. Of course, you're on my YouTube page, so please like and subscribe there. Join the Greenville Eastside IBD meetup site. That's where all the resources are. And if you want to sign up for monthly meetings, you join the Stockyard meetup site. And of course, sign-ups are totally free. So that's it. Hope you guys have a great weekend routine. Big week coming up with CPI and the Fed meeting. And that's it. I'm out of here.